Unveiling the secrets of the MOAT ETF, investing in companies with enduring competitive advantages. Welcome back, investors. Today, we're diving deep into the fascinating world of the MOAT ETF, a unique investment vehicle designed to capture the essence of enduring competitive advantages. Have you ever wondered what drives the selection of companies within the MOAT ETF? Or how it navigates rapidly evolving industries to identify companies with robust moats? Join us as we uncover the answers to these questions and more, shedding light on the underlying investment thesis, selection criteria, and risk management strategies of the MOAT ETF. Question 1. What is the underlying investment thesis driving the selection of companies within the MOAT ETF? In today's dynamic investment landscape, where market volatility and uncertainty reign supreme, investors seek refuge in strategies that promise long-term sustainability and robust returns. One such strategy that has gained prominence is investing in companies with enduring competitive advantages, often referred to as economic moats. At the forefront of this investment approach stands the MOAT ETF, a vehicle designed to capture the essence of competitive advantage and deliver superior risk-adjusted returns to investors. In this comprehensive exploration, we delve into the underlying investment thesis driving the selection of companies within the MOAT ETF, shedding light on the principles, methodologies, and strategies that underpin its success. Before delving into the investment thesis of the MOAT ETF, it is imperative to grasp the concept of economic moats. Coined by legendary investor Warren Buffett, an economic moat refers to a sustainable competitive advantage that allows a company to maintain its market position and fend off competition over the long term. These moats can take various forms, including but not limited to brand loyalty, cost leadership, network effects, regulatory barriers, and intellectual property rights. Companies with strong economic moats possess the ability to generate consistent profits, sustain high returns on invested capital, and create substantial shareholder value over time. At the heart of the MOAT ETF lies a distinct investment philosophy rooted in the principles of identifying and investing in companies with durable competitive advantages. The ETF seeks to capitalize on the inherent strengths of these companies, which enable them to thrive in both favorable and challenging market conditions. Central to its investment thesis are the following key tenets. 1. Focus on quality. The MOAT ETF prioritizes quality over quantity, emphasizing companies with proven track records of profitability, strong cash flows, and prudent capital allocation practices. By focusing on high-quality businesses, the ETF aims to mitigate downside risk and enhance long-term returns for investors. 2. Competitive advantage assessment. Central to the investment process of the MOAT ETF is the rigorous assessment of a company's competitive advantage or economic moat. This involves analyzing various factors such as brand strength, customer loyalty, cost leadership, intangible assets, and barriers to entry within its respective industry. Companies deemed to possess wide and sustainable economic moats are given preference within the ETF's portfolio. 3. Long-term orientation. The MOAT ETF adopts a long-term investment horizon, recognizing that the true value of a company's competitive advantage unfolds over time. Rather than succumbing to short-term market fluctuations or transient trends, the ETF remains steadfast in its commitment to holding high-quality businesses for the long haul, allowing compounding to work its magic and unlock significant shareholder value. 4. Risk management. While the pursuit of superior returns is paramount, the MOAT ETF also prioritizes risk management and capital preservation. Through diversification across sectors and industries, prudent portfolio construction, and ongoing monitoring of risk factors, the ETF aims to mitigate potential downside risks and safeguard investor capital during turbulent market conditions. 5. Active management with a passive core. The MOAT ETF adopts an active management approach within a passive core framework, combining the benefits of active stock selection with the cost efficiency and transparency of passive index investing. This hybrid approach allows the ETF to capture the alpha generated by skilled investment professionals while minimizing turnover and expenses for investors. The MOAT ETF offers investors a unique opportunity to capitalize on the timeless principles of investing in companies with enduring competitive advantages. By adhering to a disciplined investment process, focusing on quality, and prioritizing risk management, the ETF aims to deliver superior risk-adjusted returns over the long term. As investors navigate an increasingly complex and uncertain investment landscape, the MOAT ETF stands as a beacon of stability, resilience, and long-term wealth creation, embodying the timeless wisdom of Warren Buffett's investment philosophy. Question 2. What is the MOAT ETF's approach to selecting companies with enduring competitive advantages in rapidly evolving industries? The MOAT ETF employs a systematic and disciplined investment process to select companies with enduring competitive advantages in rapidly evolving industries. This process integrates qualitative analysis with quantitative metrics to identify and evaluate potential portfolio constituents. Key aspects of the ETF's methodology and selection criteria include: 1. Industry analysis. The ETF issuer conducts in-depth analysis of rapidly evolving industries to identify key trends, growth drivers, and competitive dynamics. This involves assessing factors such as technological innovation, regulatory developments, market disruptors, and emerging business models that may impact industry incumbents and challengers. 2. Competitive advantage assessment. Companies within rapidly evolving industries are evaluated based on the strength, durability, and sustainability of their competitive advantages. This involves analyzing factors such as technological leadership, intellectual property rights, customer switching costs, and network effects to determine the extent of the company's moat and its ability to maintain market leadership amidst industry disruptions. 3. Innovation and R&D capabilities. The MOAT ETF places a premium on companies with robust innovation and research and development (R&D) capabilities, as these are often key drivers of competitive advantage in rapidly evolving industries. Companies that demonstrate a track record of innovation, a strong pipeline of new products and services, and a culture of continuous improvement are favored for inclusion within the portfolio. 4. Financial strength and stability. Financial health and stability are critical considerations in rapidly evolving industries, where capital-intensive investments, unpredictable cash flows, and competitive pressures are common. The MOAT ETF evaluates potential portfolio constituents based on key financial metrics such as profitability, cash flow generation, leverage, liquidity, and balance sheet strength to ensure they have the resources to withstand industry disruptions and capitalize on growth opportunities. The MOAT ETF's approach to selecting companies with enduring competitive advantages in rapidly evolving industries is grounded in a disciplined investment process, robust research methodologies, and a long-term orientation. By focusing on economic moats, conducting rigorous industry analysis, and emphasizing innovation and financial stability, the ETF aims to identify and invest in companies that have the resilience and adaptability to thrive amidst industry disruptions and technological advancements. As investors navigate the complexities of rapidly evolving industries, the MOAT ETF stands as a beacon of stability, innovation, and long-term value creation, offering investors a unique opportunity to capitalize on the transformative forces shaping the future of business and society. Question 3. What role does qualitative analysis play in the MOAT ETF's investment process alongside quantitative metrics? Qualitative analysis plays a pivotal role in the MOAT ETF's investment process, serving as a cornerstone for identifying and evaluating companies with enduring competitive advantages. While quantitative metrics provide valuable insights into a company's financial performance and valuation, qualitative analysis helps to contextualize these metrics within the broader framework of competitive positioning, industry dynamics, and management quality. Key aspects of qualitative analysis in the MOAT ETF's investment process include 1. Competitive advantage assessment. Qualitative analysis is instrumental in assessing a company's competitive advantage or economic moat, which serves as a key determinant of its long-term sustainability and profitability. This involves evaluating factors such as brand strength, customer loyalty, pricing power, intangible assets, and barriers to entry within its respective industry. Qualitative insights into a company's competitive positioning and industry dynamics help the MOAT ETF's investment team to gauge the strength, durability, and sustainability of its competitive advantage. 2. Industry analysis. Qualitative analysis extends beyond individual companies to encompass broader industry dynamics, trends, and competitive landscapes. The MOAT ETF's investment team conducts in-depth industry analysis to identify key growth drivers, technological advancements, regulatory developments, and competitive threats that may impact industry incumbents and challengers. Qualitative insights into industry dynamics help the ETF's investment team to identify attractive investment opportunities within industries with favorable long-term growth prospects and competitive landscapes. 3. Management quality and governance. Qualitative analysis also encompasses an assessment of management quality, corporate governance practices, and leadership capabilities within target companies. The MOAT ETF's investment team evaluates factors such as management integrity, strategic vision, capital allocation discipline, and alignment of interests with shareholders. Qualitative insights into management quality and governance help to assess the likelihood of value creation, operational excellence, and long-term shareholder value creation. 4. Business model and innovation. Qualitative analysis delves into the intricacies of a company's business model, innovation capabilities, and adaptability to changing market dynamics. The MOAT ETF's investment team evaluates factors such as product differentiation, customer value proposition, innovation pipeline, and responsiveness to emerging trends. Qualitative insights into a company's business model and innovation capabilities help to assess its ability to sustain competitive advantages, drive growth, and navigate industry disruptions. While qualitative analysis provides valuable insights into the qualitative aspects of a company's business and industry environment, quantitative metrics serve as a complementary tool for evaluating its financial performance, valuation, and risk profile. Quantitative metrics play a crucial role in the MOAT ETF's investment process by providing objective measures of a company's financial health, profitability, and valuation. Key aspects of quantitative analysis in the MOAT ETF's investment process include 1. Financial performance analysis. Quantitative metrics enable the MOAT ETF's investment team to analyze and compare companies based on key financial performance indicators such as revenue growth, earnings per share, EPS, return on equity, ROE, and free cash flow, FCF. These metrics provide insights into a company's historical financial performance, profitability, and cash flow generation capabilities. 2. Valuation analysis. Quantitative metrics facilitate the valuation of companies based on traditional valuation methodologies such as price-to-earnings, PE, ratio, price-to-book, PB, ratio, and discounted cash flow, DCF, analysis. These metrics help the MOAT ETF's investment team to assess whether a company's stock is undervalued, overvalued, or fairly valued relative to its intrinsic value and growth prospects. 3. Risk management. Quantitative metrics also play a crucial role in risk management by providing objective measures of a company's risk profile, volatility, and financial stability. The MOAT ETF's investment team evaluates key risk metrics such as beta, standard deviation, and debt-to-equity ratio to assess the level of risk associated with potential portfolio constituents and manage overall portfolio risk. 4. Portfolio construction and optimization. Quantitative metrics inform the portfolio construction and optimization process by guiding asset allocation decisions, position sizing, and risk-adjusted return optimization. The MOAT ETF's investment team uses quantitative models, optimization techniques, and portfolio analytics to construct a diversified portfolio of companies with attractive risk-return profiles and maximize long-term shareholder value. In conclusion, the MOAT ETF's investment process is characterized by a symbiotic relationship between qualitative analysis and quantitative metrics, where intuition meets hard data, and art meets science. Qualitative analysis provides valuable insights into a company's competitive advantage, industry dynamics, management quality, and innovation capabilities, while quantitative metrics offer objective measures of its financial performance, valuation, and risk profile. By leveraging both qualitative and quantitative tools and methodologies, the MOAT ETF's investment team aims to identify and invest in companies with enduring competitive advantages and superior long-term growth potential. As investors navigate the complexities of the investment landscape, the MOAT ETF stands as a testament to the power of integrating qualitative insights with quantitative analysis to drive superior risk-adjusted returns and deliver long-term value to shareholders. Question 4. What specific criteria does the MOAT ETF use to identify companies with a sustainable competitive advantage? The MOAT ETF employs a systematic and disciplined investment process to identify companies with sustainable competitive advantages. This process integrates qualitative analysis with quantitative metrics to evaluate various aspects of a company's business, industry dynamics, and competitive positioning. Key criteria used by the MOAT ETF to identify companies with sustainable competitive advantages include: 1. Brand strength and customer loyalty. The MOAT ETF evaluates the strength of a company's brand and its ability to command customer loyalty and premium pricing. Companies with strong brands and loyal customer bases are more likely to maintain market share and sustain profitability over the long term. 2. Cost leadership and efficiency. The MOAT ETF assesses a company's ability to achieve cost leadership and operational efficiency within its industry. Companies that can produce goods or services at lower costs than competitors have a competitive advantage that can translate into higher profitability and market share. 3. Intellectual property and innovation. The MOAT ETF looks for companies with valuable intellectual property, patents, and proprietary technology that provide a sustainable competitive advantage. Additionally, companies with a culture of innovation and a track record of bringing new products or services to market are favored for inclusion within the portfolio. 4. Regulatory barriers and entry barriers. The MOAT ETF considers companies operating in industries with high regulatory barriers or significant entry barriers for competitors. These barriers can include government regulations, licensing requirements, intellectual property protection, and capital-intensive infrastructure, which help to protect a company's market position and profitability. 5. Network effects and switching costs. The MOAT ETF evaluates companies that benefit from network effects or high switching costs, which create barriers to entry for competitors and lock in customers. Companies with large user bases, strong network effects, and sticky customer relationships are more likely to sustain competitive advantages over time. 6. Financial strength and stability. The MOAT ETF assesses a company's financial health and stability, including factors such as profitability margins, cash flow generation, leverage, liquidity, and balance sheet strength. Companies with strong financial fundamentals are better positioned to weather economic downturns, invest in growth opportunities, and maintain competitive advantages. 7. Industry dynamics and competitive landscape. The MOAT ETF conducts in-depth analysis of industry dynamics, competitive landscapes, and macroeconomic trends to identify sectors and industries with favorable long-term growth prospects. Companies operating in industries characterized by high barriers to entry, limited competition, and secular tailwinds are prioritized for inclusion within the portfolio. The MOAT ETF employs a systematic and disciplined approach to identify companies with sustainable competitive advantages. By focusing on key criteria such as brand strength, cost leadership, intellectual property, regulatory barriers, network effects, financial strength, and industry dynamics, the ETF aims to invest in high-quality businesses that can withstand competition, generate consistent profits, and create long-term value for shareholders. As investors navigate an increasingly complex and competitive investment landscape, the MOAT ETF stands as a beacon of stability, resilience, and long-term wealth creation, embodying the timeless principles of investing in companies with enduring competitive advantages. Question 5. What measures does the MOAT ETF take to ensure a diversified portfolio while still focusing on companies with robust moats? The MOAT ETF employs a systematic and disciplined approach to ensure a diversified portfolio while still focusing on companies with robust moats. This approach integrates qualitative analysis with quantitative metrics to evaluate various aspects of a company's business, industry dynamics, and competitive positioning. Key measures taken by the MOAT ETF to ensure diversification include: 1. Sector and industry diversification. The MOAT ETF maintains a diversified portfolio of companies across different sectors and industries to reduce concentration risk and enhance risk-adjusted returns. The ETF's investment team carefully selects companies with robust moats from various sectors, including but not limited to technology, healthcare, consumer discretionary, industrials, and financials. This sector and industry diversification help to mitigate the impact of sector-specific risks and economic downturns on the portfolio. 2. Market capitalization diversification. The MOAT ETF invests across companies of different market capitalizations, including large-cap, mid-cap, and small-cap companies. By diversifying across companies of different sizes, the ETF aims to capture opportunities across the entire market spectrum and enhance portfolio returns. Large-cap companies may offer stability and established moats, while mid-cap and small-cap companies may provide growth potential and emerging moats. 3. Geographic diversification. The MOAT ETF may also invest in companies domiciled in different geographical regions to diversify exposure to country-specific risks and economic cycles. While the ETF primarily focuses on companies listed in the United States, it may also invest in international companies to access growth opportunities and enhance portfolio diversification. Geographic diversification helps to reduce the impact of geopolitical events, currency fluctuations, and regional economic downturns on the portfolio. 4. Portfolio construction and optimization. The MOAT ETF constructs and manages its portfolio with a focus on diversification, risk management, and alpha generation. The ETF's investment team employs various quantitative models, optimization techniques, and portfolio analytics to construct a diversified portfolio of companies with attractive risk-return profiles. Portfolio construction and optimization may involve rebalancing the portfolio, adjusting position sizes, and optimizing sector and industry exposures to achieve diversification while still focusing on companies with robust moats. The MOAT ETF employs a systematic and disciplined approach to achieve diversification while still focusing on companies with robust moats. By prioritizing quality over quantity, conducting rigorous economic moat assessments, adopting a long-term investment horizon, and emphasizing risk management, the ETF aims to construct a diversified portfolio of high-quality businesses that can withstand competition, generate consistent profits, and create long-term value for shareholders. As investors navigate an increasingly complex and competitive investment landscape, the MOAT ETF stands as a beacon of stability, resilience, and long-term wealth creation, embodying the principles of achieving diversification while still focusing on companies with enduring competitive advantages. Question 6. What types of companies are typically found within the MOAT ETF's top holdings, and what attributes do they share? The companies typically found within the MOAT ETF's top holdings represent a diverse array of industries and sectors, each characterized by strong competitive advantages and robust financial performance. While the specific composition of the top holdings may vary over time due to market dynamics and portfolio rebalancing, certain types of companies tend to feature prominently within the ETF's top holdings. These include 1. Established blue-chip companies. One common attribute shared by companies within the MOAT ETF's top holdings is their status as established blue-chip companies with a track record of longevity, stability, and resilience. These companies often have well-known brands, entrenched market positions, and strong customer loyalty, enabling them to generate consistent profits and weather economic downturns. Examples of established blue-chip companies found within the MOAT ETF's top holdings may include names like Coca-Cola, Johnson & Johnson, and Procter & Gamble. 2. Technology and innovation leaders. Innovation is another common attribute shared by companies within the MOAT ETF's top holdings. Many of these companies operate in the technology sector or other innovative industries, where they leverage cutting-edge technologies, research and development, R&D, capabilities, and intellectual property to maintain a competitive edge. These companies often pioneer new products, services, and business models, driving growth and disrupting traditional industries. Examples of technology and innovation leaders found within the MOAT ETF's top holdings may include companies like Apple, Microsoft, and Alphabet, Google. 3. Consumer brands and retailers. Consumer brands and retailers are also well represented within the MOAT ETF's top holdings, reflecting the enduring appeal of strong consumer franchises and brand loyalty. These companies often offer products or services with a strong emotional connection to consumers, allowing them to command premium pricing and maintain market share despite competition. Examples of consumer brands and retailers found within the MOAT ETF's top holdings may include companies like Nike, Home Depot, and Starbucks. 4. Healthcare and pharmaceuticals. Healthcare and pharmaceutical companies are another prominent category within the MOAT ETF's top holdings, driven by factors such as innovation, regulatory barriers, and demographic trends. These companies often develop life-saving drugs, medical devices, and healthcare solutions that address unmet medical needs and command pricing power. Examples of healthcare and pharmaceutical companies found within the MOAT ETF's top holdings may include names like Pfizer, Merck, and Johnson & Johnson. 5. Financial services and utilities. Financial services and utilities companies also feature within the MOAT ETF's top holdings, reflecting the importance of stable cash flows, regulatory protections, and essential services. These companies often operate in highly regulated industries with high barriers to entry, enabling them to maintain market share and profitability over the long term. Examples of financial services and utilities companies found within the MOAT ETF's top holdings may include names like Visa, MasterCard, and NextEra Energy. While the companies within the MOAT ETF's top holdings span various industries and sectors, they share several common attributes that contribute to their inclusion in the ETF's portfolio. These common attributes include 1. Sustainable competitive advantages. All companies within the MOAT ETF's top holdings possess sustainable competitive advantages or economic moats that enable them to maintain market share, defend profitability, and create long-term value for shareholders. These moats can take various forms, including brand strength, cost leadership, network effects, regulatory barriers, and intellectual property rights. 2. Strong financial performance. Companies within the MOAT ETF's top holdings typically demonstrate strong financial performance, including robust revenue growth, healthy profit margins, and consistent cash flow generation. These companies have a track record of delivering strong shareholder returns, even during challenging economic conditions, due to their resilient business models and competitive advantages. 3. Management quality and governance. Management quality and corporate governance are critical factors considered by the MOAT ETF when selecting companies for inclusion in its top holdings. Companies with strong leadership, prudent capital allocation practices, and transparent governance structures are more likely to sustain their competitive advantages and create long-term value for shareholders. 4. Innovation and adaptability. Many companies within the MOAT ETF's top holdings demonstrate a commitment to innovation, research and development, R&D, and continuous improvement. These companies are adept at adapting to changing market dynamics, technological advancements, and consumer preferences, allowing them to stay ahead of competitors and maintain their competitive edge. 5. Long-term orientation. Companies within the MOAT ETF's top holdings typically have a long-term orientation, focusing on value creation and sustainable growth over short-term profits. These companies prioritize investments in innovation, customer relationships, and employee development, rather than pursuing short-term gains at the expense of long-term sustainability. The companies within the MOAT ETF's top holdings represent a diverse array of industries and sectors, each characterized by strong competitive advantages and robust financial performance. These companies share common attributes such as sustainable competitive advantages, strong financial performance, management quality and governance, innovation and adaptability, and a long-term orientation. By focusing on companies with these attributes, the MOAT ETF aims to construct a diversified portfolio of high-quality businesses that can withstand competition, generate consistent profits, and create long-term value for shareholders. As investors navigate an increasingly complex and competitive investment landscape, understanding the types of companies found within the MOAT ETF's top holdings provides valuable insights into its investment strategy and underlying principles. Question 7. What are some potential headwinds or risks that could impact the performance of the MOAT ETF in the future? While the MOAT ETF offers compelling investment opportunities rooted in the enduring principles of competitive advantage, it is not immune to potential headwinds and risks that could impact its performance in the future. Some of these headwinds and risks include: 1. Market volatility and economic uncertainty. One of the most significant risks facing the MOAT ETF is market volatility and economic uncertainty. Fluctuations in stock prices, interest rates, and macroeconomic indicators can impact investor sentiment and drive short-term market movements. Economic downturns, geopolitical tensions, and unforeseen events such as natural disasters or global pandemics can also exacerbate market volatility and create challenges for the ETF's performance. 2. Sector and industry concentration. The MOAT ETF may be susceptible to sector and industry concentration risk, as it invests in companies with sustainable competitive advantages across various sectors and industries. Concentration in a particular sector or industry can expose the ETF to sector-specific risks such as regulatory changes, technological disruptions, and cyclical downturns. A significant decline in a specific sector or industry could negatively impact the ETF's overall performance. 3. Company-specific risks. Investing in individual companies exposes the MOAT ETF to company-specific risks such as poor management decisions, operational challenges, product recalls, legal disputes, and accounting irregularities. While the ETF's focus on companies with sustainable competitive advantages may mitigate some of these risks, unforeseen events or adverse developments at individual companies could still impact the ETF's performance. 4. Regulatory and legislative changes. Regulatory and legislative changes at the local, national, or international level can impact the business environment, competitive landscape, and profitability of companies held within the MOAT ETF's portfolio. Changes in tax policies, trade agreements, environmental regulations, or industry-specific regulations could affect the earnings potential and valuation of companies, leading to fluctuations in the ETF's performance. 5. Technological disruptions. Technological advancements and disruptions represent both opportunities and risks for the MOAT ETF. While innovation can create new business opportunities and drive growth for companies with sustainable competitive advantages, technological disruptions can also challenge established business models, disrupt industries, and erode moats. Companies that fail to adapt to technological changes or capitalize on innovation trends may face competitive pressures and potential declines in profitability. 6. Currency and foreign exchange risk. The MOAT ETF may be exposed to currency and foreign exchange risk if it invests in companies domiciled in foreign countries or conducts business in foreign currencies. Fluctuations in exchange rates can impact the value of foreign investments and the ETF's returns, especially if the US dollar strengthens relative to other currencies. Currency volatility can introduce additional uncertainty and potential losses for investors. 7. Liquidity risk. Liquidity risk refers to the risk of not being able to buy or sell securities in the market at desired prices or volumes. The MOAT ETF may face liquidity risk, particularly when investing in smaller companies or less liquid securities. Illiquid markets or low trading volumes can make it challenging to execute trades efficiently, leading to wider bid-ask spreads, price slippage, and increased trading costs for the ETF. 8. Performance deviation from benchmark. The MOAT ETF aims to track the performance of companies with wide economic moats, as measured by the Morningstar Wide Moat Focus Index. However, there may be instances where the ETF's performance deviates from its benchmark index due to factors such as tracking error, portfolio composition, trading costs, and fund expenses. Significant deviations from the benchmark's performance could impact investor confidence and satisfaction with the ETF. Despite the potential headwinds and risks, the MOAT ETF employs various strategies and safeguards to mitigate these challenges and enhance the likelihood of achieving its investment objectives. Some of these strategies include: 1. Diversification. The MOAT ETF maintains a diversified portfolio of companies across sectors, industries, and market capitalizations to reduce concentration risk and enhance risk-adjusted returns. Diversification helps to mitigate the impact of adverse events or underperformance in specific sectors or industries on the ETF's overall performance. 2. Fundamental research and due diligence. The MOAT ETF conducts rigorous fundamental research and due diligence to evaluate the strength, durability, and sustainability of a company's competitive advantage. This involves analyzing qualitative and quantitative factors such as industry dynamics, competitive positioning, management quality, financial performance, and valuation metrics. By focusing on companies with robust moats and strong fundamentals, the ETF aims to minimize company-specific risks and enhance long-term performance. 3. Active portfolio management. The MOAT ETF employs active portfolio management techniques to select, weight, and rebalance its portfolio of companies with wide economic moats. The ETF's investment team continuously monitors market trends, industry developments, and company-specific news to identify investment opportunities and risks. Active management allows the ETF to adapt to changing market conditions, capitalize on emerging trends, and manage portfolio risks effectively. 4. Risk management and hedging strategies. The MOAT ETF implements risk management and hedging strategies to mitigate market risks, currency risks, and other potential sources of volatility. This may include using derivative instruments such as futures, options, and swaps to hedge against adverse price movements or currency fluctuations. Risk management techniques help to protect the ETF's portfolio and preserve investor capital during turbulent market conditions. 5. Investor education and communication. The MOAT ETF provides investor education and communication to help investors understand the investment objectives, strategies, and risks associated with the ETF. Through regular updates, reports, and commentary, the ETF seeks to keep investors informed about market developments, portfolio performance, and risk factors. Transparent communication fosters trust and confidence among investors, helping to mitigate uncertainty and manage expectations. The MOAT ETF faces potential headwinds and risks that could impact its performance in the future. These risks include market volatility, sector concentration, company-specific challenges, regulatory changes, technological disruptions, currency fluctuations, liquidity risk, and performance deviation from benchmark. However, by employing strategies such as diversification, fundamental research, active portfolio management, risk management, and investor education, the MOAT ETF aims to mitigate these risks and enhance the likelihood of achieving its investment objectives. As investors navigate an increasingly complex and uncertain investment landscape, understanding and managing potential headwinds and risks is essential for maximizing long-term returns and preserving capital within the MOAT ETF. As we wrap up our exploration of the MOAT ETF, one thing becomes clear: investing in companies with enduring competitive advantages is not just a strategy, it's a philosophy. By focusing on quality over quantity, conducting rigorous qualitative and quantitative analysis, and embracing diversification while prioritizing companies with robust moats, the MOAT ETF aims to deliver long-term value to investors. While potential headwinds and risks may loom on the horizon, the principles of competitive advantage and prudent investing will continue to guide the ETF on its journey to unlocking sustainable growth and prosperity for shareholders. Thank you for joining us on this enlightening adventure, and until next time, happy investing!